Eric Muathe for January 10th and January 11th, 2014. Let's take a look at how the markets closed on Friday. And we see that the Dow was down about 1%, Nasdaq was down 0.68, S&P 500 was down 0.84, VIX was up about 3%, and crude oil was down about 1%. For the week, the S&P 500 was down 0.65. The Nasdaq for the entire week was down 0.48%, and we see that the Dow was down 0.54%. So let's take a look at the charts, see how they settled out. We begin by taking a look at the Nasdaq weekly, and I still believe the fact that we failed to hold above the prior weekly closing high of 47.91, which was the prior breakout. The fact that we are below that price, in my opinion, until the market can break out again, this market looks suspect on a weekly chart right now and could go lower. I know that makes no sense, especially if you consider that intra-week or during the week we held this prior breakout. So we are stuck in this range. This breakout here failed, and then this support here was confirmed. So in essence, we can say we seem to be stuck in one of these two lines, and eventually we either break out to the upside or we break down and we continue going lower. In fact, I think it's important to note that this hold when the market was down early this week and held, or this past week and held, was a good indication of at least the market supporting itself at a prior breakout level. But now we see that we're still trading underneath this previous weekly closing high. My other reasoning is why I think if I was to take a side is a couple of things. We're still trading underneath this line, and trading underneath this line, there's a possibility of slipping lower. Now, if the market can gather enough momentum and break out above that line, then we can say we are truly in an upward trend. So that's why I think that maybe this is looking, even though we are stuck in a range, and again, just kind of, because it's the same thing across the board, we are stuck in a range there. I think the risk could be to the downside as of right now. That's my thinking. I could be wrong, but at least I'm taking a position on that. You take a look at the Dow on the Nasdaq daily and go back to the prior high, higher highs, lower lows. And I did discuss the idea that this was a bearish negative divergence as we made higher highs in price and lower lows in technicals. The RSI failed to hold above 61.8. I think that's a problem for this market as of right now. Now you can see after the last two big up days, and one of the reasons why we had a big up day on Thursday is because the Nasdaq did close above 50 during that session on Thursday. Now, let's take a look at a clean chart for the Nasdaq. I want to show you something pretty cool. So let's go to the Nasdaq and take a look at the daily. If you draw a straight line connecting the highs, something like that, you can see that this is a problem for the market as of right now. So if the market can move above that line, it's gonna be bullish. But if this becomes resistance like it's showing right now, maybe this market is not as strong as it might seem. There's also another view I would like to share with you, if you don't mind. And it is this, let's go back and find this breakpoint. So this breakpoint corresponds with this area in the market that led to the most recent drop, short-term swing trade drop. Not a major drop, but it was good enough for a trade. On hindsight, if we draw a straight line from that break, let me draw it slightly lower, something like that, you can see we've come here before, dropped below that line, was here for a swing trade lower. We've done the same thing here, which was off the highs for a swing trade lower, and now the market has not moved back above that line. I think this could be where the market starts stalling. In fact, let me show you that, because let me spend a couple of seconds here on this one. There was another break of, if I can draw the line like that, so connecting the prior lows on the RSI on the daily for the Nasdaq, there's a break around the 50. Now let me spend a second on this one, because it explains what's going on. Once we broke below that line, we had this drop. Once we moved above the line, the blue line, which is around the 50, we had the market come from here to all-time highs. And every time we move below the line and above it with uniform activity, it's a short-term low. Uniform activity below the line and back above it, short-term low. But now I think as of Friday, this is where the market seems to have stalled on Friday, with the Nasdaq moving back below 50. So what I'm trying to get at is, if the market can climb above that, that's going to be bullish above the 50 and stay above the 50, and also above this line I had shown on a prior. So above those two lines. So two lines the market has to contend with on the RSI. This line around the 50 and these top lines. If it can move above those two lines, that's good. If not, then bearish. Keep in mind that the 50 for the Nasdaq is where there seems to be some fight going on between the bulls and the bears. Above the 50, it's a good market. Below the 50-day moving average, maybe something's going on in terms of running out of momentum. Remember the backdrop. It's important to remember this. The backdrop is we made higher highs with lower technicals. So this here could be a major high. And that's how you make a major high. The backdrop is not good, in my opinion. Now, if you take a look at the MACDs on the daily for the Nasdaq, we can see that if we claim the area above 0 on both MACDs, that's bullish. But if both MACDs stay below 0, like one of them is already below 0, if the other MACD stays below 0, then that momentum is going to push this market lower for a swing trade to the downside at least. Now let's take a look at the Nasdaq hourly. And we can see that as of Thursday's high, the market came and hit the RSI right there. And that coincidentally happens to be where the highs line is. So if you take the highs on the hourly and draw a simple straight line, you could have seen that the market was going to stall there, and it did. There was also a prior line that gave us the high. So we know that that's the high. That's a fact. Draw a line that gives us the break point of that high and extend it like that. You can see we stalled on that level, which is two lines now, the tops and the prior break line. And so that could be the reason why the market came off the highs after Friday's Thursday's good up move, about 323 points on the Dow. So we can see that the hourly is telling us that pullback makes sense. If you take a look at the Nasdaq from a 30-minute chart, we can also see that coming off the highs there on a 30-minute chart. And so we find out where that break was, and the break is somewhere here. Draw a straight line. You can see uniform activity above the blue line, back below it, and that gives you a short-term high. Also, there's a line connecting the highs on the RSI on the 30-minute chart like that. So that high connects all these points and through this one. So this high was well telegraphed on the 30-minute chart. Okay, and so we're going to have to see how the market opens on Monday. Remember, we are going into options expiration, so you have to be open to the possibility of a lot of volatility and lots of tricks. Take a look at the Dow from a weekly. We see that we failed to hold the breakout level above 17,958. Failure to hold above that, and as long as the market is failing to hold above that prior breakout, now you wonder whether we are going to be trading lower. Failed breakouts are notorious for killing markets. But what's good is if you're a bull, the market held the prior breakout when it came back to this level this past week at the lows. That's where the market tagged that and moved up. So like the Nasdaq, we are stuck in this range. Either we are eventually going to break out to new highs, which is going to be for a fantastic move higher, or we break below this support zone and we see the market moving lower. I'm going to pick the downside just because I'm trying to understand what the charts are saying until I see more information, because if you take a look at the highs on the RSI and draw a straight line, something like that, you can see we hit that high, through this high, and then recently there. So I think if the market stays underneath this line like it's doing, underneath the blue line, one can expect this market to continue being under some type of pressure. Also keep in mind that should we move below 50 on the weekly RSI, we should get a big drop in the market. The Dow daily, and this shows very clearly the support when the market came back here to the prior daily closing highs, and the market held that low very well. We see that the Dow is back above the 50-day moving average, which is bullish. Okay, that's good. But the backdrop is slightly bearish. The backdrop of this most recent high came with declining technicals, and we discussed this over the last week or so, like that. That is a problem. And this, at this particular high on the RSI, it also connected with the prior highs. So the prior highs, interestingly enough, stalled the most recent high on a daily basis in the Dow. So right there. So if I was to show you a clean chart for the Dow, so let's take a look at a clean chart for the Dow. And here we have a clean chart for the Dow, just like the Nasdaq, a simple straight line connecting the highs, like that. Gives you an indication of what's going on. And I think what's going on here is this is connecting the highs. The market stalled here on Friday. You can easily see that for the market to do well, it needs to be above that line. Otherwise, this short-term, seemingly innocent resistance could start dragging this market lower. Also, on the MACDs for the Dow daily, we need the MACDs, if you are bullish, to hold above zero. Right now, it looks like it wants to hold above zero. If it stays above zero, and the other secondary MACD also moves above zero, then the market should be okay and safe to the upside. Take a look at the transports weekly, and even on the transports we see that the market failed to hold the prior weekly closing highs, and we still continue seeing that we have negative divergence resistance, just like the other charts are showing. RSI is pointing down. It's not that broken in the sense that we are still trading around the 10-week moving average. We'll see how that is going to settle out. Take a look at the daily for the transports. We can see that now the 50-day moving average is almost acting like resistance, but the daily RSI most recently came back to this support line and held. And anybody who's new to this analysis can see that this is where the market has been finding lows, and we've been using these lows over the last year and a half for entries back into the market. And even most recently, this held, which might explain why we had two nice up days during the week. So we also see that the daily previous breakout level held there. So this one is almost like in no man's land, and we can see that just like the other markets, we are trading from the prior breakout level between here and here. So in this range, we are range bound. We could either at some point break out to new highs and make new highs, and we could break down here very easily and start another leg down. S&P 500 weekly, we can see, just like the other markets, a failed breakout on the weekly, trading around the 10-week moving average. So that's not a bad market at all. We see that on the weekly we have confirmed negative divergence on the weekly RSI. Also, this break line continues to be resistance. So on the weekly, I can say, like the other charts we just looked at, that they seem to be indicating a market that could easily get worse, even though it's been trading a little bit okay over the last couple of days. S&P 500, just like the other markets, transports, the Dow and the Nasdaq, did find support recently on the daily as prescribed. This is where the S&P 500 has been finding support on the daily over the last 2 years or so, on this line, every time with uniform activity, and that's the key. Uniform activity to the line and back above it. We had a relatively big down day, I would say relatively, because the S&P 500 closed below 50. And take a look at the S&P 500 60-minute chart. Really just the same type of analysis like we had done for the prior Nasdaq, Dow transports. You can see that there was a break of this trend line on the hourly here. This is off the previous highs, and this pullback to a straight line, this has become resistance also, just like it became resistance and pushed the market lower for a swing trade low. So if the market can continue showing resistance underneath this line every time it comes here, we should be looking for a pullback in the market, even short term, hour to hour. Take a look at the 30-minute for the S&P 500, and you clearly see that resistance was back at this line here. Off the highs on the 30-minute, we broke down on the RSI somewhere here, corresponds with this move. Let me find that. It corresponds with this move there off the highs. Draw a simple straight line, and you can see that this is where the market found resistance late Thursday, early Friday. So let's switch gears here and take a look at the Canadian market. And we start by taking a look at the Canadian market on a daily. And on the daily, we can see that we are trading underneath the 50-day moving average and also underneath the 200-day moving average. We have a bearish cross between the 50 and the 200-day moving average. We had come back to our prior resistance, a very simple line for resistance. So let me take off that stuff. On the daily, a simple straight line connecting the highs could have given you indication of resistance recently. So once the market hit that level, coming into this past week, we knew that this could be a level of resistance. We talked about it, and we did get this push lower. So it's easy to say that as long as the market is trading underneath this line, the market is suspect as far as the Canadian market is concerned. We can also see that the hourly continues showing that the MACD is below zero, indicating momentum could be more to the downside. Also, recently we saw uniform activity above zero and back below zero on the MACD, which corresponds to the highs of November. So I'll show you that in a second. So uniform activity above zero, back below it is always a sell signal. Uniform activity above zero, below zero is always a sell signal recently. And those two MACD uniform activities correspond with this high and this high. So that market, in my opinion, ended the week also looking like it could easily continue being on the bearish side. Take a look at the Canadian market from a weekly standpoint. We are back below the 10-week moving average, so that's not a good sign. We seem to have highs connect resistance if you connect the highs like that. So unless the market can move above this indication, in my opinion, seems to be indicating a market that wants to go down. If you connect the highs like that close enough, you see that it connects this high very close to that high, and recently back to this high. The market in there was down 2.5% because the weekly RSI moved back below zero, below 50, excuse me. So below 50, hence we have a big down week. want to show you something interesting here on the weekly MACDs for the Canadian market, and we had uniform activity above zero, back below it. We tried to move above zero here on the weekly MACD and got rejected. Keep in mind the backdrop of this is we are trading underneath and trading at 2-year lows on the MACD for the Canadian market. Indication, in my opinion, here is this is a market that could easily continue seeing lower prices. As you can see, it should be under pressure as long as the MACD is trading underneath zero, and the last 2 times it came to the zero level on the MACD, it seems to have had uniform activity and rejection. That's a market that wants to go down. Let's take a look at the Brazilian market from a daily view. And from a daily, we see that we are trading underneath the 50-day moving average, which generally is bearish. We are trading underneath the 200-day moving average, and we also have a bearish cross between the 50 and the 200-day moving average. Indication is over weeks, over months. It should not surprise anybody if this market continues moving lower. We also have a line connecting the prior highs on the RSI like that, and you just draw the line connecting the highs, and you can see this is why it's stalling. Had a big down session on Friday because of this resistance being confirmed at the top side of the daily RSI. There's also another line to watch, which was from the prior RSI break, and that break was in September off the highs. Since then, a simple straight line, which happens to be around the 50, has been resistance and best place to go short the Brazilian market. Resistance at 50 there, which gave you that high. Uniform activity above 50 and back below it, which gave you that high there. We've seen uniform activity resistance there, which was short-term high, and over the last couple of days resistance there, which is here. So that to me indicates a market that could easily record lower prices. Go to the weekly for the Brazilian market, and what I wanted to show you here is on the weekly RSI, it's make or break. It needs to hold that line if it's gonna do well, and if it breaks it, expect a sharp move lower. So it's make or break. Above the line it's good, below the line it's bearish. There's also another line that should be support on the way up. This is where this market has been bouncing. Every time the market moves back above that line, we have a multi-week trend to the upside every time. Multi-week rally ensues. So now the market is going to have to decide whether it wants to jump above that line and have a nice move to the upside that should last a couple of weeks, or maybe now we're in a different market where we're going to start showing resistance at the line and a break of this secondary support line and a move lower. Which actually reminds me, let me digress for a second, go back to the NASDAQ daily. I forgot to mention something very simple. On the daily chart for the NASDAQ, if you are paying attention, there was a simple line connecting the lows this week, connecting this low through this low like that. So when the market hit that level and started moving high, you should have suspected that the market could have had a nice bounce, and it did. Go back to the Brazilian market, and since we were done with that, now let's switch gears, go to the French market weekly. And the French market weekly continues trading in this multi-month, multi-year wedge. But I think the indication here is for my money is lower. Number one, we are trading underneath the highs of the weekly RSI. We are trading back below the 10-week moving average. So if you are to take a direction, and also keep in mind that the MACDs are both below zero as far as the French market is concerned, I would say this is a market that should see pressure to the downside, or if it's going to move higher, it's going to need a lot of work before it can move the MACDs back above zero. We take a look at the French market on a monthly chart, and this is a little bit on the concerning side if you're a bull, because if we take this line that I discussed last week for subscribers. But every time this market has moved below this since 2000, which was somewhere around here, we've had a major bear market in the world markets. We broke below here in late 2007, early 2008, which is here. We had the crash of 2008, and this is a monthly chart going back to 1990. Recently we broke below the blue line, which is somewhere here, and already we seem to be indicating we want to go lower. So the question is, have we seen the sell signal in the market, and maybe all we are seeing is a dress rehearsal for lower prices? You know, I would say yes, given the chart. Without any further information, if I was to pick a direction, I would pick lower. Also, keep in mind that moving below 50 on the monthly RSI could generate another push to the downside in terms of momentum. We take a look at the MACDs, and one of the MACDs is just about to slip back below zero. So that could be a problem also. If we take a look at the German market from a weekly view, so go back to stick to Europe and take a look at the German market from a weekly, and again we see that it failed to hold the breakout just like the Dow did, S&P 500 and the Nasdaq. Recently this breakout failed, and now we are seeing lower prices. We have the resistance from the top side of the RSI like that, and so you can see that clearly this is where it's been stalling and has been putting the market under pressure. If it continues staying below underneath that, if it breaks below 50 on the weekly RSI, it could continue going lower. So I don't see a lot of strength there, but keep in mind, every time the market over the last 2 years or so has come back to this line here, you've seen the market bounce. It did so when it moved here, bounced on the line, bounced on the line, bounced on the line, and again found this to be a support area. So we are stuck, we can say. The highs are becoming a problem. We can't move higher, and yet when we come down, we find support on this RSI level. So are we range bound? Could be. We shall see. Take a look at the French market from a monthly view. And on the French monthly, just want to sensitize you to the break below 50 in 2000 was somewhere there, and we had this massive plunge. We broke below 50 late 2007, early 2008, which was somewhere there. We had this massive plunge. This is a monthly chart going back to 1995, and recently we are looking like we want to break below 50 on that monthly chart. Should we break 50, we should expect another plunge. That's why I'm saying if I was to make a directional bet without any more information, I would think lower makes a lot of sense from a technical standpoint. You can see that one of the MACDs is moving below zero. The more it moves below zero, the more the market is going to be turning south. Let's take a look at the Kospi weekly, and the Kospi weekly is also at a make or break situation. This is where it's been finding support recently. If this holds, maybe there's some rescue here, but if it breaks, expect more downside action. Also, we see that the RSI is at a make or break. It needs to hold above that line and above this line. So those two lines need to hold. Right now it's holding, but for some reason, if it breaks below that and breaks below the price channel lows, expect a move to the downside, probably a very fast move. Take a look at Japan daily, and Japan daily as of Friday session was showing support back above the 50-day moving average, and on the daily we can see that this is where it's been finding support. Every time with uniform activity, even if you just look at it from a quick view, uniform activity has been entry zone. The key is always the uniform activity on the RSI for a signal that is worth anything, and on and on. And so recently we had this double bottom which gave us these lows. So above that green line, the Japanese market should be okay. If it breaks those lines and moves back below 50, then now we have to question what that means. Take a look at Australian market on the daily. So let's go to Australia, and we can see it's back to where it's been finding resistance on the daily price channel. It needs to be above that if it's going to do well. It needs to be above this RSI line if it's going to do well. Keep in mind, it's been finding it very difficult to move above that RSI zone. So let me draw that with a different color so we can see that a little bit clearly. So this is where it's been stalling, and that stall point right there was off the highs. And so how do we find that stall point? Just see the break point there, and that's how we get this red line. We had come here previously, had a double top resistance on the daily RSI, gave us that high, and now we seem to be back here. If the market is going to do well, it needs to be above that line. It needs to be above this line where it's been finding resistance lately. It needs to be above those lines, otherwise, in my opinion, it still continues to be a market that could continue being moving lower. We go to India, and we begin by taking a look at the Indian market from a daily view. And from a daily chart, we can see support on the price. If you draw a straight line, something like that, connecting the lows. So that seems to be holding. We are trading around the 50-day moving average. All it needs to do is move back above the 50-day moving average, and that will be okay. Support came exactly, and I mean exactly, where we were expecting support, and that support comes from this previous entry point on hindsight. So you use the previous entry point, which was successful, which was there, and this corresponds with this entry in price before this magnificent move higher. And so you generate this green line, which I'm now going to be also drawing in blue just to confuse you even more. Anyway, you can see support and a nice entry there. Uniform activity below the line, back above it. That's a nice V. Which means it's a reliable entry. So nice entry there, and we've been kissing that line ever since then. So above that green line, the Indian market should be okay. My only query with this one is the MACDs are trading below zero. If the MACDs can generate enough power and momentum to bring them back above zero, then maybe this is a true bounce. Otherwise, if they stay below zero and start pointing down, that would be bearish. So I would watch the MACDs to see how things play out. Let's take a look at the weekly for the Indian market, and we had seen that we had drawn this line connecting the prior lows. A simple straight line, as simple as they get, but they are packed with a lot of information. And this is where this market has been bouncing. Most recent bounce was here on the line, and now it either bounces back above the line or breaks below it. And since we don't know, we shall see. Right now it looks like it's holding above that, which is a good sign of at least stability. There's also a previous line, this breakout above the prior RSI highs. The breakout there was for this nice breakout in price. That price breakout, perfect entry on hindsight, but also by technical theory, led to this nice jump. So we use that information to draw a line connecting the RSI with a horizontal line like that. And the market knows what it's doing. It's bounced on the line once before, which was this weekly lows, for a move to fresh highs. Whee! And then now it is trying to decide if it can hold above that. That's bullish. It also happens to be where this line is connecting with the prior lows. Above those two lines, Indian market is okay, and below that zone, then it's gonna start picking momentum to the downside. Let's come back to the US. I'm going to take a look at the VIX, the volatility instrument, on the daily. So on the daily, this volatility break, this break in price with the RSI showing resistance, and this was so easy. All right, I'm not gonna say easy because nothing is really, I mean, markets can do whatever they want. One day they give you this signal, but this was easy. If you remember, we talked about this being where the VIX has struggled and the market has been a buy. So in a way, relatively easy to spot because we talked about this before it happened. while it was happening, and we knew that if the market and the VIX stalls at this line, we are going to see highs on the VIX and a nice entry back into the market. That's exactly what happened. So that made sense that the market pulled back, the VIX pulled back. Now if you take a look at the hourly, and I don't want to put too much weight on the hourly, but maybe it's telling us something. If you draw a line connecting the lows on the VIX, something like that, you can see that this is where the VIX is finding support, indicating that there's a possibility that it could start short-term pushing to the upside. Whether that's going to happen or not, it's hard to tell. Now let's take a look at Apple, which had a nice daily bounce. And if you want to see why, it's because the daily chart came back to the lows. A very simple straight line connecting the lows there, through that low, touching that low, and recently that low, which was here at about 105. So the bounce high over the last couple of days makes a lot of technical sense. Also, if you take the prior line that has been on the charts, because this line here, how this works, I have no idea. But if you use this line, when Apple moved above that RSI line, it gapped up, and since then it's been using this line for support. And we've talked about this over the last couple of weeks and months, that this is where this market has been pushing Apple higher for at least a couple of days, couple of weeks, and recently touched that line, which is here, and now we see it come here and kissed it and bounced higher. So we're going to see whether it's going to struggle here at the 50, or if it captures back above the 50, that's good. You also see that on the daily price, there is resistance coming from the top side like that. It needs to be above that line connecting the daily highs, otherwise it could stall. Want to show you the Apple from a weekly standpoint, because there's some information there too. On the weekly for Apple, you see that if you take the line connecting the RSI lows and do a simple straight line, let me draw this, something like that, you can see that it is doing its very best to hold on the line. Above that line connecting the lows, then it's going to be bullish. If it breaks that line, that's bearish. I just want to end here by showing you, let's take a look at Apple on an hourly chart, which might coincide with the market's opening relatively weak early in the week, and it's because the break line of the highs, so that break line on the RSI gave us that high. That's a fact that it gave us a high into a simple straight line. You can see that the market has been stalling on the hourly chart since then. So if that becomes resistance again, then that's going to be a short-term high here at about 112. Otherwise, if it can move above that line, then it might have a chance of moving higher. Don't forget that there's also resistance. So a couple of things here. This is obviously resistance on the RSI. It needs to be above that if it's going to do well, otherwise it pulls back hour to hour. Don't forget that there's topside resistance. It needs to be above that if it's going to do well. I want to conclude here by taking a look at the markets from a monthly view. So go to the market. The Dow monthly continues holding above 69.1, which is bullish. Take a look at the S&P 500 monthly, which is still continuing holding above 69.1, which is bullish. And it's been bullish, and it's been holding above 69.1 on the S&P 500 since sometime in March of 2013, and continues holding above that. As long as the market is holding above 69.1 on the monthly, we're just gonna get short moves lower and the market making new highs. So that's the key, the market holding above those 69.1 level. Take a look at the Nasdaq, and we see that Nasdaq continues holding above 69.1. It's been holding above 69.1 generally since sometime summer of 2013, when it broke out there above the prior monthly closing high. So as long as the Nasdaq is holding above 69.1, this continues being a great market. If you want to watch part 2 of this video, I encourage you to go ahead and log in. So log in for part 2. Otherwise, have a great weekend. Eric Mwathe, good luck, peace, and blessings. Woo!